G'day everyone and welcome to our Elephants on Business podcast, improving your small business journey one episode at a time. And today, Oz, we're going to step through the difficulty of borrowing money from a bank when you're a business owner.
Yeah, correct. It's great to be back. So we often get obviously as accountants, a lot of clients that come back to us either as a business owner or as an employee and essentially ask us what's the difference like when it comes to lending. So they might have traditionally been an employee and they've moved to a sole trader or going up the business journey and trying to generate some profits, and then they'll potentially want to buy some assets or buy their home or just get some lending for their personal needs. And then often we get a question, so what is the main difference? Like, is it easier as a business owner or is it harder? Can you talk us through
it's such an interesting
how
concept.
That sort of works?
I find it very interesting when you're an employee. In your head, you're like, geez, I could get fired at any time. Yes, I got a stable wage maybe, but I don't have much flexibility. My boss fires me, here's what it is. I can change jobs. And you might feel like as a business owner, and the reason you started the business owner journey was like, I feel I have more control, I can make decisions, something happens, I can react quickly. But when you go to a bank, which is just a risk-averse institution, it's often you're faced with more difficulty than when you're an employee. Yeah,
so like most of the time, the business owner is probably like, as you said, wanting to earn more. So they've gone into that journey. I want to earn more.
Absolutely.
So potentially I can maybe buy a bigger home.
Grow some wealth, all this kind of stuff, right? And, it is a bit of the sad truth where I think it's much more difficult as a business owner, and I think Australia needs to really improve its understanding on how powerful small business is. If you look at kind of COVID, businesses that were small and nimble survived. They ended up getting grants. Yes, they had a bit more cash on the balance sheet, but ultimately a lot of employees got stood down. You didn't have much control. You were just stuck at home, where business owners were pushing marketing, they were pushing new products, they were going online digitally, they were starting podcasts like we did. A lot of stuff to grow, but I'll answer it at a very high level. The reason that a bank likes employees is because there is foreseeable stability.
Yeah, okay. So it's like they see it as you got that stable job potentially, and it's going to be there for the long term.
And it's seen that the risk of an employee is super low because in Australia there's lots of jobs, especially now when the unemployment rate's really, really low. An employee can easily find a job, and it's maybe that they'll always find a job at that same pay grade. So that makes it very easy to lend to an employee. As a business owner,
or do they get promotions as well along the way? Or they can apply for another job that's probably paying them a little bit more, and it's quite easy to just transition across.
Spot on. And it's a very rare circumstance. Someone who's wanting to take on debt and wanting to buy an asset or wanting to buy stuff is going to go down in pay.
Yes.
Because if you want to kind of buy a house or buy assets, you're a little bit ambitious, which means you'll probably take that pay rise, or when you change jobs, at least stay at a minimum the same.
Yeah.
So that's kind of why employees are really, really good. I'll tell you the difference of a business owner is that it's very hard to gauge exactly what your income is and what it can be. I get a pay slip for $100,000.
It's pretty simple. It's your weekly, fortnightly or monthly wage that hits your bank account.
It's coming in, and it kind of matches at a minimum a monthly mortgage repayment. Salary gets dropped in, mortgage goes out. A business owner can probably earn 100 in a year, but some quarters might be slower. Your business might be a Christmas rush business. Your business might have a winter boom and then a summer bust.
Yes.
So it's difficult on any given day to understand that. So it really comes back to the quality of information, and we'll talk about the tips at the end. So that's
the main things that a bank looks at, right? So
the main things a bank looks at when it comes to your business is that's kind of outside your general, okay, does this person have a credit default, or this person have overly excessive expenses? More from a business point of view, it looks at quality of information. Remember, there is something ludicrous a week in Australia, 10 to 20,000 home loan applications a week in Australia. It's ludicrous,
that's a huge
right?
Volume,
It's a ludicrous figure. And if you think about, there's a person somewhere that looks at your documents and assesses, should I lend this person money? That person who's making that decision doesn't have any conversation with you, Doesn't ask how business is going, how you feeling, do you feel good?
So they're just looking at numbers
They're
on a
looking
page
at
and
a bunch
and
of paperwork.
some questions that are answered along the way.
They're really looking at a bunch
An
of paperwork.
application,
They're not
yeah.
getting to know Oz's great guy. He's done this. He's grinded through some tough times. Man, he's resilient. Fantastic. He's got family support here. He lives in
Yep.
Australia for 10 years. Nah, give me some paper and I'm
Yeah.
going to make a determination. So your quality of information is extraordinarily important. If I get a profit and loss on a piece of paper, handwritten, if I get an Excel file,
Or like a balance sheet that doesn't really tie back to
Doesn't
like
doesn't
it doesn't
reconcile,
reconcile back to
doesn't
the bank
match,
account.
things don't
There's
make
a lot of
sense.
things there. Yeah.
that's a real problem, because remember, someone's making a determination on a piece of paper.
Yeah. Yeah.
So have your information as clean and crisp as possible. Is
Yeah,
super important.
Yeah. Make sure you have a system that tracks that information, right? So like, as obviously accountants, we're at the forefront of, delivering that information, but it is the onus of the business owner to make sure that they understand their numbers as well a little bit.
Exactly
And,
right.
how do I read this profit and loss? How do I read my balance sheet? Just to tick it off and say,
You want
that actually does make sense. Like my
Yeah.
bank account balance was that. If I had some stock, that's my stock on hand. If I had some, receivables, that's what it was,
Exactly right. You think about it. It's all about the paperwork at level 1. Level 2, the important thing they look at is obviously they look at your financial performance.
Yeah.
So, it's important to understand what your actual financial performance is. Not my revenue's gone up, or I've got some contracts in the works and my sales funnel looks great. I've got an awesome website. These are qualitative items the bank doesn't really care about. Doesn't care about if you've got 10,000 Instagram followers or 100,000. Doesn't care about if you're launching a new product next year.
Yeah,
It goes,
or what,
what's your profit?
Yeah, what's your profit?
What is your profit?
What do you? Yeah, okay.
So and that's the difficulty, right? Because a business owner is theoretically a bit more entrepreneurial. We see value in, man, that website is going to get me this. I just engaged a marketing company, so I think this is gonna happen.
So it's in 6 months' time, I will be hitting this.
And then if
type
I buy a
of
house
revenue.
now, I'll be laughing,
Yeah,
right?
yeah.
Where a bank goes, what'd you do last year?
Yeah, prove.
What'd you do 2 years ago?
Yeah.
And it's just like, I don't even remember as a business owner 2 years ago. I barely know what happened last month. I'm running at an accelerated pace. So know your financial numbers, and we'll talk a bit. It's really just about profit and the income you're taking out of the business.
Yeah, okay.
Really, really important. And then, as I said, if you have good quality information and like financial reports, and you know your numbers, we can dive into this later, but really understand the strength of your business. Is your a high cash business? Do you have stock, debtors? Is your business got a lot of property value? Is there intrinsic contracts that you can value? Inside your business is value. You need to be able to understand and pinpoint where your
that value
documents
comes
are
from.
there. Is it my cash flow is strong? My expenses are super low compared to the industry. So those are kind of the main things. A bank.
Do they do some benchmarking along the way, or accept some forecasts, or?
Yeah, they
Not
do.
really?
Like those things help, but all of that are a 1%. You have to run a profitable, good business.
Yeah, yeah. So essentially, they're looking at what can you prove me as of today, and maybe a little bit of a forecast
You can
might
do
help,
forecasts.
but it's not really.
But remember,
it's
a
not
forecast
based on that at all.
A forecast in an entrepreneur's mind is very positive. A forecast in a bank's mind is 10% growth.
Yeah, it's quite
Sounds good.
easy to go on Excel and just put in,
Yeah.
As an entrepreneur, 25-30% growth.
Yeah, I'm going
drag
to
it
do
across the
XYZ.
12 sales.
And it's probably reality, but the key thing in this question of business owner versus employee, I can guarantee your employee wage at 100 is probably going to occur for my 30-year mortgage.
Yes, yeah.
An entrepreneur, when you're going for a bank, sometimes forgets it's a 30-year mortgage. A bank goes, I need some info for 30 years. Like, show me.
And the stats around small businesses not surviving for a long period of time,
very
that
bad.
also goes against you, I guess, as a business owner too. So, that all does make sense, yeah.
And there are a whole bunch, it's for a different episode when we deep dive a bit more into finance. But
Like the different options of
there's
lending,
heaps of
you say?
options.
Like,
There's full documentation, low documentation, alternative documentation, where you lower the quality of your information, which allows you to maybe not have everything ready, but it comes with trade-offs. It comes with more savings.
higher
All
interest
this
rate.
kind of stuff. Maybe higher interest rates, but there are options out there. I think the key thing in terms of difference is it's more difficult.
Yes.
So you have to be more prepared.
Yeah,
That's
okay.
very, very simple for that question.
Yeah, so that's good. And then in terms of, some of the questions that we get from our clients at times is, what does a mortgage broker actually do for me, and is there actually do I have to pay for that type of service?
Yeah, and it's a question that is an interesting one because not many people know about the industry. Especially business owners, they feel like mortgage brokers are more for employees.
Yeah.
And it's true. A majority of mortgage brokers love employee-based lending. It's very simple and easy, just like a bank does.
Yep.
I'm not going to lie there, but a mortgage broker's job is to think about them as like your pre-vetting performance review before you go to a bank. The last thing you want to go to a bank is give all these documents, waste all this time, and the outcome is poor.
Yeah.
It's a very tiring process getting lending. There's paperwork, there's questions, especially for a business owner. Especially
like coming back to the point that you raised before, like I think you're trying to say that whenever there is lending, you have to be prepared for it. So like if you speak to someone early and then they prepare you, you might be able to change a few things in the next 6 months or 12 months if you're not ready. And then essentially when you're better prepared,
plan, right? Yeah. So the job of a mortgage broker is to essentially find you a loan for your scenario. If they can't find you a loan, the benefit of a mortgage broker is they can help you prepare. They can say, oh, wow, you got a new website and you're expecting this much leads and this much profit in 12 months. Maybe if you wait 12 months, you can do this. Or right now, you can borrow 500 grand. If your business continues the trend, you might go to 800 grand.
Yes, yeah.
You just have to be patient for 8 months
or
12 months. So they help you bridge the knowledge gap between how your business is going to how you can actually borrow money.
Yep.
And then
what the bank wants to
there
see.
is the admin of they will go to multiple banks, they will help you review scenarios, they will work with the lender, and they will narrow down the field. There's something ludicrous like 60, 70, 80 banks. I don't even know in Australia. Some of them are very specialized in self-employed.
Yeah.
Some are better. To be honest, you assume that the big four banks in Australia, they're all exactly the same. Not necessarily. In Australia, to be honest, if you're a small business, NAB and ANZ,
good, right?
really good. If there are specific industries like you're a real estate agent or you have a financial planning business, Westpac's phenomenal. If you have a property-backed business with lots of factories and things like that, CBA wins.
Okay. So like you need to know these little intricate details. Like it obviously helps you
really helps.
Apply for that.
And so that's kind of what a mortgage broker does. And I would always say, biased as ever, I'm a mortgage broker, to just speak to them. Generally, to speak to a mortgage broker is a kind of a free service. They'll happily sit down and talk to you about your scenario and what's going on. Now, is there a fee? That depends. Depending on the complexity of your lending, there can be fees. So some fees that you might hear of is if you are a simple sole trader or you've got a simple company, probably not going to be any fee because it's fairly straightforward.
Yeah.
If you are a shareholder of a big business and you have a side business and you have trusts and you have a lot of complexity lending, there's needs for different sorts of asset classes and stuff like that.
So the assessment,
might be fees.
Because you'll have to assess that information, go through it. So there's a lot of time.
It's a lot to go through. So there can be fees upfront.
And that's generally an upfront fee to assess.
Yeah,
the
usually
application.
I would say there is a fee to assess. It might be $1,000, $2,000 to help you clean up your figures, understand what you can do. Then there'd probably be like a success fee. So like if we go ahead and I get your loan, this is a success fee.
Yeah, okay.
So there's like mandate fees, upfront fees, a whole bunch of stuff. The important thing to do is don't be afraid to ask that question. Oh, how do you charge?
Yeah.
Business owners understand that a mortgage broker is also running a business.
Yeah,
how do you charge? How does it work? Is it success? I'd always say that.
But typically an employee is free of charge, right? So like that a smallish business.
Free of charge.
Sole
trader, single company owner.
Free of charge as well. But then essentially if you're running a bigger business, there's a lot more complexity around that. There might be a fee potentially around, assessing the information, working out which bank to go to and how to apply for that particular loan. Yeah, so that's cool. So then, those ones where you charge free, so like the, your employee and your small business, how do you actually get paid then?
Yeah, it's super interesting. So one of the reasons our industry started somewhere in the 2000s. And it was built because the big four bank had too much market share. They controlled something ludicrous, like 80-90% of loans were done to the big four bank. And albeit they weren't doing anti-competitive practices, they were probably doing anti-competitive practices. And so if you're a big bank in Australia, you have a lot of options. You can sell through your website. You've got branch network everywhere. Your smaller lenders, ING, Macquarie, AMP, Bank West, ME Bank, these guys who are great lenders could not compete.
Yeah, so they were just struggling to get...
Struggling because they don't have a branch in every suburb. And back then there was no internet.
Yeah.
A lot of good internet. So the government came out and said, we're going to introduce mortgage brokers. A mortgage broker is going to be a secondary sales arm to the businesses. You have to get accredited, you get licenses. We get paid only if and when you choose to use us to get your loan. It all has to be disclosed up front. And to be honest, my pitch to everyone was, when it started 20 years ago, it wasn't a good industry.
Yeah.
It was car salesmen. It was a whole bunch of people coming in.
And you only get paid when it settles, right? So
only get paid when it settles. But at the start of the industry, there could have been banks that were offering different incomes for different loans. So if I was a dodgy mortgage broker 20 years ago and you sat down with me and said, I got $1 million loan, I could send you to CBA and I might get paid $2,000, but I could send you to ABC Bank and I might have gotten paid $5,000.
Yeah, so there was
then
different
the dodgy
fees
practices coming and going, the best scenario for you is ABC, where maybe it wasn't the best.
Yeah, so they were just looking.
Money.
Yeah, they were looking at themselves. How much am I earning from this particular deal?
And so, like multiple rounds of regulation, multiple boom and bust cycles. The Royal Commission, in particular, in like 2018-19, cleaned up the industry. And when I joined, it was pretty much where it is now. Where out of those multitude of banks, the top 20, 30 banks pay you about the same.
Yeah, so it doesn't matter you're just looking out for the client's best interest in that case. Like, what's the best rate? Whereas maybe in the past, it was just like looking out for your own interest as a mortgage broker and trying to get the highest fee.
The industry has really cleaned up. The percentage is somewhere along the lines of, I think, 60 to 70% of new home loans in Australia is originated through mortgage brokers. So it's a good sign. But be very mindful that your mortgage broker, check their accredited, check their history, check how long they've been in business, how many loans they've done. Ask the
those questions.
Ask the questions. It's not rude at all. You're asking about my business. Happy to share.
Yeah, that's great. And then moving on to the next section that we typically get asked a lot as accountants is, my business has a value there. Can I use that value to maybe leverage in and borrow off the actual business value itself? Like, is there such a way of doing that?
Yeah.
Does that apply to lending? Or is it just based on profit again? Or can we actually use a business value?
Every business does have a value.
Sometimes small business owners think their business is worth a lot of money. And it might be true, or might not be.
The difficulty is that value of your business is only ascertained when you sell it.
Yeah. So
it's not like I can draw money from the value of my business.
Yeah.
It's only when that business sells one day that you get a whole bunch of lump sum and you pay your loan back. The short answer to this is no, you can't borrow off the value of business. But there are some key things here. There are industry-based businesses that you can borrow against.
Yeah.
So the main examples are businesses that are kind of generally sell fairly often. So there's a known sale price for them. So key ones are financial planning, real estate businesses, accounting businesses, mortgage broking businesses.
Yeah.
Generally, your professional-based businesses have a value.
There's that industry multiple,
that a bank is happy to lend against, which is really important to understand. So there's an industry-based style of lending that's out there. So if you're in a certain style of industry, you can kind of understand for your mortgage broker or a bank, how would I extract that value?
Yeah.
So that's really important. The second important thing to think about is that yes, every business has value, but it's really pinpointing what that value is. So
how do you come up with that value?
How do you come up with that value? How easily can a bank absorb that value to lend against? I've kind of got 6 main ones here that you think about when you're lending for a business. So yes, the most important one is lending from the profit and your wage. That's your kind of basic.
That's the first level that they look at.
Basic level, right? The next one is what they call an asset lend. So you have equipment, trucks, vans, machinery that you have paid cash for. You can maybe get some debt against that asset in your business to give you some money back.
Yeah, okay.
So that's like hire purchase liabilities, sale and leaseback options where there is a value. If something goes wrong,
the bank can always go
sell
back
that
to
van,
that truck.
And then usually think of those assets as serial number based things. Your big refrigerator has a serial number. Your car has a VIN number. Asset based lens is kind of the main one, and I'm talking about asset that's not a property. These are
Yeah.
just like things in your business,
Because
fit-outs and stuff like
typically the property, obviously, you can
It's
get a
kind of-
value. Like that's
there's a
its
value.
own separate,
It's a separate
section
thing.
where you can, use the equity, et cetera, et cetera. A lot of people probably already know about that, but it's more about, I guess, the business side of things, not to do with property.
Spot on. So the asset's the main one. The next one, if you think about profit as your first line of repayment for a
Yep.
bank, there is another line which is called cash flow.
Cash flow, yeah.
So your profit and cash flow can be different. It's a very complex thing. Your accountant can kind of go through all that kind of stuff. But a high cash flow business can be borrowed against to a very high degree.
Yeah,
And that's
okay.
called like leverage lending.
Yes.
Where you're lending on a multiple of your cash flow. If you earn 400 grand a year of cash flow, you can borrow 3, 4, 5, 6 times depending on the strength. Now, that's very complex based lending. A bank will go through and go, well, tell me why your cash flow is good. Is it you have amazing R&D product that no one else has? You have contracts that no one else has
Yeah.
that's stable. So they're kind of important things to think about. Your cash flow can be lent against. The next one that we talked about, which was that industry, is
Yeah, the goodwill. Yeah.
Goodwill is the actual theoretical value of your business.
So
and
that's based on those industry multiples, etc. Like it's
industry
pretty easy
multiples
to
come
get
in.
that value.
An accounting business has a value that's quite known
Yeah.
based on a certain revenue figure, financial planning, mortgage broking. There are some basic industry multiples where you can lend off goodwill. It's a very hard one to come by if you're not within those set bank policies.
Yeah,
Super hard to come by. And the last, the remaining ones are more based on your revenue. So
Yeah.
there's trade finance and debtor finance, which is kind of like I get an invoice. I've invoiced Oz
Yes.
for 300 grand. I have to do all this work to get that 300 grand, but I need the money
you
to
need
do
to
the
do
work.
the money to
Gosh,
do it.
that's a bit frustrating. You can lend against the invoice.
The actual invoice, yeah.
It's known as like invoice finance, debtor finance, factoring. There's all these words for it, but really, you get $1 million. Someone goes, "I'll give you 80 cents against that. I'll give you 800 grand. You
Yep.
do the work.
Yep.
When the $1 million comes in, you
You
pay
can
back.
pay back. Yep.
So they're really important ones. And finally,
Typically, they're more for bigger businesses, right? Like, or
it
have you
depends,
seen that?
right? It really comes down to the strength
type.
of your debtor.
Yeah,
So if
yeah.
your debtor
Doing a
is
government institution?
if you're doing a government institution, if your debtor is a university, if your debtor
Yeah.
is BHP, if your debtor is a big one, if your debtor is mum and dad fish shop,
Yeah, that's
it's
likely
a bit hard,
not to.
right?
Yeah,
It's a bit
yeah.
hard. So it comes back to debtor concentration and the quality of that, but don't think that you can't. Like if you've
Yeah.
got that problem where you're like, I can
I need-
earn good money, but
But
I
I
need a bit
need
of
the
money
money
to get it done.
Yes.
You can do that. So always think about that gap. The gap can be solved. And the last one is specialist lending, which is kind of like there's a specialized nature of your business, a petrol station, a childcare center, a healthcare business. Think about those
Yeah,
kind
that,
of things.
that falls into its own sort of niche little market, maybe where there's some
But
value
again,
there
the
to
summary
extract.
and the answer for can you lend against the value of business? Yeah, absolutely. You just have to have a good way of proving the strength of your business.
Yeah,
That's
so
where
it
your
comes
mortgage
back
broker
down
and
to
your
what
accountant.
and what you were saying before, the quality of that information, how good your business
Absolutely.
is, and time frame of your business. Does that count in these sections? Like if
It
you've been
doesn't-
running the business
it doesn't,
for
right? Like the rule of thumb is longer the better.
Yeah.
But if you had a fantastic career and you've transitioned and you've got like amazing experience
Yes.
and you transition into a business and it's kicked off,
Yeah,
I would
it's-
lend against that.
So you've already proven yourself to the
Proving
bank.
yourself, if you are, it's the same as if you have been studying as a medical professional for 10,
Yeah.
20 years and you start a GP clinic, of
Yeah,
course I'm
yeah,
going to lend
yeah.
against that. So,
So there is those-
it's a lot of judgment, but
There's a grey area.
there's
in it.
always a grey area, but really common sense prevails.
Yeah.
If you would lend to that person out of your own pocket, then it's a bankable client. That's the kind of gut feel.
Yeah. And then typically we get some clients that do come back to us essentially and from our perspective, obviously our job is, tax minimization. So like as an accountant, you're trying to reduce the
tax
the tax
minimization.
bill, right? So how does that come into effect in terms of that lending? So obviously that goes against what we were talking about before, where there was we want that large profit or,
Absolutely.
and we're trying to obviously minimize our job as an accountant is trying to minimize that bill. at
One of the
times.
biggest fights I have daily with small business owner is Well,
why did
tax
you
minimisation.
Yeah.
Tax minimisation.
Why did your accountant tell you
And
to
to
do
be
that?
honest, one of the biggest sells good accounting businesses will minimise your tax.
Yeah, that's right.
And I understand that. I am a small business owner. Tax minimisation is something I think about. Tax minimisation is something I get advised about from my accountant. This is the kind of high-level summary and the way a bank looks at it. A bank understands that there is tax minimisation.
Yeah.
But if you are minimising your tax, theoretically, you should have more savings. So if I earn 100 grand as an employee and I have to pay tax at 35 cents, then I will have a certain amount saved. Let's just choose a figure. I'll have 30 grand saved after my expenses. Now, if I'm a business owner and I did earn 100 grand, but I claimed all this stuff and I had all a great accountant and I paid no tax, I should have 50 grand saved.
Yeah.
I should have more money in the bank if I'm tax minimizing. And if you can show that I have more cash, that's when alternative lending comes in. So low documentation, alternative documentation lending is essentially, well, I know your numbers aren't what they are on a piece of paper. And the reason I know that is you have way more cash than you should. So
it doesn't reflect.
If you tip all that money in, then I'm at a better risk position. So it's like this trade-off between, if your quality of information decreases, you need to lower the bank's risk.
Yeah,
you need to lower the bank's risk by putting in more cash.
Yeah.
I'm of the view that if you plan properly with your accountant and your financial planner or whatever your board of advisors are, then you need to understand that sometimes paying tax is a cost to get stuff done.
Yeah.
And if you are accepting of that, then I think you can build wealth.
Yeah, beautiful.
If you're not accepting of that, I think you'll have a constant battle between the bank and the accountant.
Yeah. And that's sometimes like we always, that's what we offer here at Elephant. We essentially sit down with the client and we determine, from a tax point of view and accounting point of view, yep, that looks great. And then does that work from a lending point of view as well?
Yep. You have to have that lens. And again, the biggest difficulty is if you've gone through a period of tax minimization and then randomly you want to buy a property or invest and you can't get money, it's very frustrating.
Yeah.
So a good accountant should be thinking about what are your plans for 12 months. A good mortgage broker should be saying, based on your numbers, you can do this.
Yeah.
Those like go up or down, it changes.
Yeah.
So it's important to have the two.
And so what's sort of your final tips to your business owners or even just your employees?
My final tip is,
so be across the numbers. Like that was one that came up quite a bit, quality of information.
You can run a good business and it might feel like a good business, but your numbers are the true source for a bank. So know your numbers. And like we're a big advocate of Xero here.
Yeah.
Get good financial accounting software. You can pull a report in a day. You reconcile your accounts.
Right.
You know your profit. You have to be
at
across
any
your
point
numbers.
in time. We can pull that information.
I want to go borrow today. I open up my Xero file. If I've done things correctly, like reconcile, put my invoices, clean them all out, I can print the profit and loss, and we're off and running.
Yep, exactly.
So know your numbers. The second one is really, you have to be extraordinarily planned.
Yes,
if you want to buy a property or you want to do something with the bank when you're a business owner, it's not something that you can have on a whim, which is very difficult for business owners because we run on like day to day. I'm thinking of this. I'm thinking of this. Oh, that's a great idea.
You got so many ideas coming up, so it's just like maybe it's I should
difficult. And we're opportunity chasers. Oh, there's a cheap thing. I'll grab that. Or there's I saw a property for sale. I might grab that. It's difficult.
Sometimes that doesn't work. Obviously,
doesn't play out. It can be
point.
frustrating. Plan.
Yeah.
If you want to buy something this year, then know what numbers need to be shown, know what revenue targets. I think it's a nice way to give KPIs for staff, to give profit numbers, to have budgets.
Yeah, because
it helps you figure out what you can do.
Yeah, it comes back down to optimally running that business and making sure you're hitting those numbers, as you said,
hard.
Which is great goals to set for your business as well, and it pushes and motivates you and everyone else around you, I guess.
The last one is, as annoying as it is, no one cares in a bank about anything else but your profit and the strength of your business. I have people go, I'm thinking about doing this in 12 months. I've got this plan. I've got this in the works.
Yeah.
It's irrelevant. It's absolutely, sadly, irrelevant. A bank cares about how am I going to get repaid? And it's rarely going to be by the strength of your social media activity.
Yeah.
It's going to be rarely by the strength of your forecasted plans in your head.
Yeah.
No one gives a shit.
Yeah.
Really,
just like what's my profit? Is it good and are your numbers good?
That's it. Amazing.
No, great stuff.
Thanks so much
Thanks
for
a
tuning in,
lot.
guys. If you've reached to the end of this, obviously, please like, subscribe, follow. A whole bunch of stuff going on, and we look forward to bringing you more. Thanks again.
Thanks
Bye.
a lot. Cheers. Bye.